All right, welcome to another episode of the Aspiring VC podcast. It is my great pleasure to have fellow Elon University alum Ryan Vett with me, a serial entrepreneur, angel investor, startup coach, and strong media presence. So before we get into anything too serious, Ryan, the most important question the listeners want to know, Dunkin' or Starbucks, and why?
That's a tough question, Matt. Thanks for having me. Because I own a couple coffee shops and we roast our own coffee. So that's a really, really tricky question for me to betray my own brand. I do often drink out of Starbucks cups because I collected those as I traveled around in 2000, 2005 around the world, and I collected those. So I'd probably lean towards Starbucks. Love how they treat their team as well. But my first choice would be the Oak House blend at the Oak House.
Of course, of course. And let's just have a 2-minute summary here. Who are you? What do you do? And what's your kind of story?
Yeah, I'm your typical serial entrepreneur. Have been selling something, whether that's gum on the playground or a t-shirts or whatever it might be for my entire life. It did start with a lemonade stand and has progressed through 8 different startups, of which I've either founded or have been one of the executive team members. So I've done a lot of different things, from bootstrapped companies to companies that are well into their Series C and have raised tens of millions of dollars and have 9 figures in revenue. So I've really seen the whole spectrum. My favorite is either super early stage, when people are trying to figure out their ideas, especially with first-time founders. And so I enjoy that. And then I also enjoy those in that high growth mode where they've kind of figured it out, have a little bit of traction, and all of a sudden the wheels are starting to fall off because they're moving so fast, and I can come in and help add process and structure. So those are my two favorite areas, but I love startups of all sizes.
That's amazing. Yeah, I mean, I think the level of experiences of different situations you've seen is, pretty rare. So it's awesome to see that. I'd love to dive into a little bit more on your origin story. I guess, kind of more on your life and your experiences in high school and college, and then everything professionally that brought you to where you are now.
Absolutely. It really did. Like I said a minute ago, and I say often, it started with a lemonade stand. And that's where I learned some of the most fundamental business principles that carried me through into so many other areas of my life. I think one of the things that I'm working on now, I'll give you and your listeners and viewers a sneak peek. I've got a book coming out next year called, I was going to tell you the last title. No, $1 Million Lemonade Stand. And it's not about how to make a lemonade stand that makes you $1 million, but it's talking about the constants I learned in the lemonade stand business that then morphed into a neighborhood newspaper. Only had about 2 issues before it fell apart. And I wasted all my parents' paper and toner. But that led to a marketing company, because that little funny newspaper landed on the desk of a business person who was like, oh, this person can design. I'm going to call them. I don't think they knew I was about like 12 or 13 at the time. And so that launched into what I would call my first business. Had 13 individuals working for me by age 15 or 16. And they were in 2 different countries. We were serving clients in 25 different countries. And we were doing primarily nonprofit marketing and fundraising. So I've always been in fundraising mode, but not always necessarily for startups. I didn't really understand the dorm room or garage startup that we like to talk about today, or even venture capital. I had no idea what that was. I barely understood what the stock market was at that age. But then grew that business it was profitable pretty much from day one, and went to Elon, as you know. We didn't meet while I was at Elon, but we met while you were at Elon, and I was on the advisory board there. And, that's where I did my first real startup. It was the software founder type thing. My co-founder was a CTO, super smart, still stay in touch. He actually invested in my most recent business. And then I was kind of the visionary, the design guy, the marketing guy, sort of the sales guy. I don't really chalk myself up to a salesperson. I'm not the best salesperson, but marketing, I do like telling the story. And so we did that. And that's where I first learned about angel investing. We were sitting in the basement of a mansion. It was massive. And we were sitting in this basement of this individual who's saying, hey, here's a term sheet, here's a check, here's equity. Do you want to do this? And that was kind of my introduction to that. That startup also started getting offers to be acquired. So I learned about due diligence and what a data room is, and the importance of having agreements in place early on that are bulletproof, and all of those things. So I had the opportunity to learn through that journey, and that was kind of my first startup, if you will. Then took a step back from startups for a little bit and did some consulting. I opened up a coffee shop with a friend of mine at Elon that you know, and now we've opened a second one. That's sort of a startup in and of itself, very different Main Street business, but definitely a startup with all the same challenges, just at a different level and harder to actually get capital when needed. But so did that, and then got back into the startup world with my first venture-backed startup, and that was a medical device. I was one of the original executives on the team before it was even FDA approved, and kind of grew through that and saw the ups and downs of highly regulated industry, which I had not been in before. Medical device and pharma, we were dealing with both, extremely highly regulated. And so how do you market? How do you tell the story? How do you raise money? What do you need to do to make sure that you're conserving the cash that you get to get through these tests and the things you have to do with just verification and everything else with the FDA, and how can you make sure you utilize your dollars to grow your product and grow your revenue while staying compliant? And so that was a really fascinating, exciting thing, an industry I thought I would never be in. And then did a little bit of software there. At that same company, moved to another company that was kind of a sister company, similar board makeup, that was much bigger. They had just raised, 8-figure round, I think, and they were just needing some redirection and some branding. And so the board kind of transitioned me there, was there for a little bit, started Boone after that, which you were an investor, Matt. Thanks for investing. And you got a little return on that too. Hope you don't mind me disclosing that. But that was a really fascinating story because I started another SaaS company in healthcare, again, regulated, something I didn't think I was going to go back into. Really wasn't. I really thought I was going to grow fast. March of 2020, we were having meetings with VCs that I only dreamed I would even be able to get a response to an email, like a no response, let alone having some really in-depth conversations. And, COVID hit. So by the end of March, all the VCs had said, you know what, we're just going to conserve our capital for our existing portfolio. Our revenue that was growing on a bad month about 20%, on a good month about 50% month over month, went to zero because we were in elective healthcare. And so all of a sudden I've got, investors that I'm responsible for, team members that I'm responsible for. And I was trying to figure out what do we do? So we pivoted, and our pivot was still kept us on track with our vision and mission. And we can talk about that in a bit too, because I think vision and mission are important. But pivoted, and we were able to not only continue running the legacy business when the world allowed elective medicine to start practicing again, but we pursued a new verticals that caught the eye of an acquirer and acquired us in about 18 months after the last dollar was raised, returning a pretty decent amount to all the investors, especially those earliest on. So it was, not the story or the fairy tale. I guess it was ultimately a fairy tale ending, right? More the Shrek version where an ogre was in the middle of it. But it was really an interesting learning experience because we never took our eye off the ball, and our vision at Boone was practicing good. Our mission, everything we were doing was practicing good. Are people better because they have heard or interacted with the brand than before the brand? And that goes for investors, team, contractor, anybody. And I can confidently say yes. And that, even if I would have lost all the money, which thankfully we didn't, but even if I would have, I would have slept really well at night, knowing that we set out, we even named the company Boone because it means doing something good or beneficial. And we did that the entire time. And that was worth it. So did that. Then I helped at an accelerator for a bit and was able to work with a bunch of different startups. I had done an accelerator previously through Boone. That was part of our pivot. And I always have a core of startups that I'm always advising and mentoring. So I was able to see how kind of a large scale accelerator can impact a lot of startups quickly. And now I'm back on my own, and I'm passionate about consulting, and I'm spending more time to write, speak, and do some other things to really pour into founders and even just people in general that want to pursue their dreams, their visions, and their passions.
It's an amazing story. And I think, again, it just shows the breadth of experience and the types of companies and environments you've been in at all these different stages, all these different industries. It's really amazing. And, I definitely I think we can go into the mission and vision that you were talking about. And another thing that I would just add to it is, how you think about finding the next opportunity. And is it you that finds these opportunities, or are these opportunities finding you, or is it somewhere in the middle? Kind of fascinated by that.
I think, I mean, that's a really interesting question. I haven't probably thought about that answer as much as I should have, right? But I think there's an interesting, when you put yourself out there, when you're networking and you're just talking to people and often listening, you hear people's needs. And when you hear people's needs, sometimes you have that skill or ability or specialty to meet that need. And so I think part of it is, yes, some of them sort of find me and through way of conversation, but then I hear it and pursue it. And that's with with some of the more permanent positions I've had. As far as a lot of my advising, I actually don't really pursue any of those individuals that I advise. They usually come to me, and that's just because of word of mouth, or we know each other before. So if tomorrow, Matt, you're like, "Hey, I've got this new idea," and you came to me, that it would kind of fall in line with that. So it's not. I'm not actively hunting, nor do I think I'm actively being hunted. I think it's just, you're networking, you're contributing to everyone. And I think a proven track record of caring for people, it has hopefully followed my name. And that's really what I'm about. I'm wanting to see others succeed and thrive, because I had so many people. You asked a question that I didn't actually fully answer earlier, but I've had so many people in my life along every step of the way that I didn't even know at the time. Half of them were adding value. Not that I thought that they weren't valuable, but I just didn't know how valuable a conversation or advice was until you look back in hindsight 2020. You're like, wow, that person at that moment in time was there for a reason. And so I want to be, hopefully, for at least one more person, that same thing.
I would love to go into the angel investing. How you started to get on that other side of the table. Some of the companies you've invested in, and the process that you built around it.
Absolutely. I think for me, I invest in people. I think most investors would say that. Obviously, if a great person has a bad idea, unfortunately, I won't invest. But generally speaking, when I look at a company, it's, hey, is the idea great? And is the person great, or the team or the people behind it? And I think the other thing goes back to kind of those 5 things I outlined earlier. Does it serve a mission? Is it inspiring others towards a positive change? I made the mistake in a short time working with a company that was a great company, incredible culture, but they weren't adding value necessarily to those that they served. In fact, their goal was based more on consumerism and driving purchases, which I'm in marketing, so obviously part of what I do is that, but it was not to the benefit of the end user. So I think for me, what I'm looking for when I invest in a company is it benefiting or bringing joy to the end user in one way, shape, or form? So for example, I am passionate about, craft beverages, as you know, and have a couple of big investments that I personally invested in from the Oak Houses, but I've invested in a lot of brands too, smaller brands. And the way I find those, generally speaking, is via a funder, Start Engine, Seed Invest. A lot of Main Street businesses are raising on platforms like that. So usually I'll throw them very small amounts of money, right? You asked me a couple of days ago when we chatted, where's the volume of my investment? And the volume by dollar amount is undoubtedly in private rounds. The value via quantity is absolutely hands down via the equity crowdfunding platform. So just to put that in perspective, but my process is to look at the company, look at the possibilities. Can I add value, especially if they're looking for someone to be more active, which a lot are not. But if they are, can I add value and all of that? And then do I believe in where they're going? I sometimes look for a proven track record, but usually I look for a proven personal track record and how they've behaved in other situations. I think there's obviously experience with age. When I tell people about wine, there's only a couple things that you can pay for with wine, and one of them is age, right? That's something you can't replicate. It just, you can pay for that. So same thing, there is experience with age, but at the end of the day, there are tons of founders who are young and don't have a previous exit and still can be extremely successful. So I'm happy to take a chance on that if their personal values and mission and vision align with what I believe.
And are there one or a couple of the investments that are most top of mind right now, or that have the greatest return, or that you think have the greatest impact on customers?
Yeah, one is really fun. It's sort of out of my wheelhouse, but there's a startup out of DC called Poppy Flowers, and this was I'm part of a sidecar fund with a VC firm, so I invested through that. But um, this is a startup that sends beautiful flowers that helps small businesses internationally that are growing flowers. And I don't know all the proper terminology, so that they probably roll when they hear how I'm describing it, but I'm doing a poor job. But basically, they do subscription-based flowers, and they pivoted big during COVID and are doing really successful. So I bought a subscription for my wife, and basically the flowers come in a box and they're all separate, and you do your own arrangements, and it's this really fun hobby craft with these like exotic flowers that you just wouldn't normally have, and they last forever. Like, I mean, 2 weeks, but if you buy them at, your local grocery store, they're dead by Friday if you buy them on a Monday. So that's actually just so different than SaaS or anything else that I've been a part of in the past. That just really excites me, and I love their branding, love what they're doing. So that's probably the one that comes immediately to mind, and it's just sort of fun.
That's awesome. And for the listeners who want to get involved with angel investing and venture, and what I think everyone has kind of this different path, but what are some of the practical pieces of advice that you'd have for them on networking and internships and jobs, and figuring out what their mission is?
Yeah, that's a great question. I think if you want to invest, the equity crowdfunding platforms are great. $100 minimums for most campaigns, and you get to dabble. Usually the deal flow on there, and this is a generalization, I don't believe this is always the case, but usually the deal flow might not be as high potential as some other deal flows, but we are seeing that change quickly, and VCs are actually investing alongside a Reg CF round. So that's very exciting, and I look forward to watching that continue. So anyone can be an angel investor, right? And I wrote an article in a magazine last year called "Buying a Unicorn," and how you can invest for just $100. So that's one way. And then as far as getting a job in venture capital, it's not the easiest industry to break into, for sure. It's not impossible by any stretch, but it's just getting to know people. It's a very relational industry, and you have to start, pretty much as an analyst grinding, and that's okay. And I think a lot of people have sometimes have pride issues. I know I do. It's like, oh, I don't want that job, right? But the reality is you have to start somewhere, and every industry is different. It doesn't matter what you've done or what you've done before, but I think there's an opportunity for anyone to just start networking and go to pitch days, it's a little harder during COVID, obviously, attend webinars. A lot of VCs are now putting out good content that is educational, maybe offered a guest blog. I don't know if you can do that or not. I've not tried, but the idea that just came to mind. So, but just be involved, engaged. Twitter's actually kind of regained its popularity in the investing world. So that's an option, but just be involved, listen to the conversation, and jump in where you can. Clubhouse is obviously a big place where investors are hanging out right now. I'm personally, it's not my medium necessarily. I do have an account. I've hopped in a couple rooms, but it's a great place to meet and network, and that's another great tool.
Definitely. I think we touched on this a little bit, but just again, what is the impact that you want to have in the world, both kind of as a founder yourself and with some of these founders and companies that you're going to be coaching and mentoring and continuing to support?
Yeah, I think one of the biggest things that a lot of founders set out to do is make a lot of money. And while there's nothing inherently wrong with that, I think when your vision is making a lot of money, and I'm speaking from experience where I've failed, when that becomes my sole focus, you're not ultimately going to feel successful. And so with Boon, I would say, in light of the circumstances, it was one of the more successful stories, right? With a huge pivot in the midst of a really high, really low. And it was because our vision was never on how much money we could make. Our goal was to make sure everyone that was involved was compensated more than they put in, whether that was their time or their money. And we did that, but our vision was practicing good. And so going back to what impact, or what dent do I want to make on the universe, to borrow Steve Jobs' quote, I think it's really, are people better having worked with me than before, after having worked with me than before? And that doesn't mean every relationship ends well. That doesn't mean that people don't get terminated, or investors don't lose money, or people don't leave companies, right? And so it's, can you do it in such a way that even really sticky situations, because not everything's cut and dry, can you do it in such a way that hopefully your people are at least better off because they've learned something, you've left something, you've left it in a better place than when you left it. I remember when I wanted to start a lawn mowing business, which I never ever got off the ground. Sadly, that's a long story. My dad always said, if I'm going to borrow his lawnmower, it's got to come back cleaner than when he gave it to me. And I think you need to do that with everything that we're gifted. We're given, we're stewards of everything we have. So how can we make sure that it's better after than before?
Totally. So are you ready to move into some rapid fire questions?
Yes, I'll try to be concise.
Awesome. First one is, who's been one of your most important mentors and why them?
There's been honestly so many different people in life at so many different times in life. So I always try to keep three people. I told you I keep it concise, but I will. First person is always someone who's gone before me. I call that the forerunner, right? Someone who's run the race, whether that's personally, professionally, someone that I can look up to, call and say, hey, I made this mistake, or I'm at this crossroads. Second one is a running mate. And so I've every Thursday morning for over a decade now, I've talked to the same guy who's my same stage in life. We do life together. We talk about what's going on. And then the person who's behind you, or the rear, right? And that person's the people I get to pour into. And so I always keep those three people in my life at all times. And sometimes they change who they are, and depending on different stages of life, or geography, or time zones, or just where I am in life. But I always keep those three people in those three slots.
That's awesome. Who's one of your favorite investors that you track? And this could be, venture, or it could even be, public equities or hedge funds or something.
I'm really bad. I don't track very well when it comes to that. I obviously look at the bigger names, your Sequoias, Greycrofts, RE, first round, watch what they're doing a lot. And so that's, I don't have any one person I look at. I like to look at as broadly as possible, but I know that's not a clear answer. I do follow a number of them on Twitter. I rarely tweet, but do read some of what many of those post.
No, that's
and
great.
There's so many more, by the way. Those were a couple that came top of mind.
No, of course. I love everyone, and I've had some great unique answers to some of the rapid fire ones, and I do love everyone's unique take on everything. What is like a company, and I guess we talked about the company that you really liked earlier that you invested in. So maybe what are some of the characteristics that you like in, startups that tend to either become investments or just get you really excited about what they're doing?
Yeah, I think it's, do they have vision and values? Are they taking care of people well, whether that's their team, their clients, customers, whomever? Do they have the potential, if it's an investment, do they have the potential to grow and scale? Obviously, that's a key one. There's plenty of good businesses that will bump along forever and are not necessarily bad investments, but not necessarily the investments I'm taking. And are you proud that you invested, not because you could give them money, but can you get behind their idea, and are you willing to champion that? And would you do that whether or not you invested? I think those are the things that I personally look at.
And last one here is, what are some of the top, podcasts or books or blogs that you really enjoyed or enjoy following?
Yeah, from a business perspective, one of the best books I've read recently is Phil Knight's Shoe Dog, the CEO of Nike. He wrote it himself, which is just so cool, and is super well written, which I appreciate more. But in the past year, I've really gotten into reading some of these autobiographies by some of these individuals, like Bob Iger at Disney. The Ride of a Lifetime is the name of that book, which was a good book. Howard Schultz, From the Grounds Up, I think it's called. Maybe it's just From the Ground Up, but it's a pun on coffee there, somewhere in there. And so those are some of the books that I've really enjoyed, those three, in the last year from a business perspective, because they show the true hardships that you go through in running a business of different sizes, especially Phil Knight's book and Howard Schultz's, but those two in particular talk about the hustle, the grind, and it's not always easy and fun, and there's hard things that happen. So that's that. And then there's another one, and I'm going to botch it, so I'll give you the author's name because it's easier to remember, but I think it's called The Ruthless Elimination of Hurry is the name of the book. It's an orange cover and hurry is crossed out. And the author's name is John Mark Comer, and just read that. I will go on record saying I don't agree with everything in the book. There's some, it's a great book, but there's just some principles and philosophies I wouldn't personally employ. However, it looks at the history of time. I mean, that's not what the premise of the book is, but that's what I found to be most interesting. And it talks about the key things that we have done to ruin our schedules in America and really in the world, and how to get your time back and build margin and things like that. So I found that book to be extremely insightful, and have recommended that to several individuals who have really benefited from it.
That's awesome. Yeah, I'm going to have to check it out.
Yeah.
I have a couple outro questions here. The first one, took this from Tim Ferriss, but I just love the concept is, what's a purchase of $100 or a couple hundred that has like had an outsized impact on your life in terms of creating some joy?
Love AirPods. I know that's silly. Those are, I always, because I travel a lot, and trying to untangle cords for headphones, because I listen to audiobooks all the time. I think that's like one of the, I didn't think I wanted them. So I'm always an early adopter, and I push it off. I was like, I don't need them. But I think that honestly is probably one of the things that I love. And then, yeah, that probably in that price range, that's probably it.
That's funny. You're actually the second person to say that. And I would agree. I mean, once you go AirPods, you don't go back. It's just this amazing change. And, people can make fun of Apple all they want, but they do have these amazing products that really do change our lives.
They do.
Last one here, Ryan, is just, promote yourself. Where can people find you? Twitter, LinkedIn, Medium, podcasting, all that stuff.
Yeah, pretty easy to find. Just Google Ryan Vet. I'm the only one in the world. So it's there's a veterinarian hospital named Ryan Vet, but as far as human beings, I'm the only one. So you can Google me. Instagram's usually my social platform of choice. I know it's a little out of the ordinary for the investment world, but that's usually where I hang out. But email on my website, tons of resources on my website to get a hold of me. I'm not very hard to find. So
awesome. Well, Ryan, thank you again. Really appreciate you coming on the podcast. Hope to have you again, and excited to stay in touch.
Thanks, Matt. Appreciate it.
Catch you later.
Looking to innovate, invent, and disrupt? We're your partner to fuel your growth. Contact us to learn more.